Good afternoon. Good afternoon. Good afternoon. Good afternoon. Quick audio visual check. Can everyone see my screen? Should be big and blue and filled with glorious letters. And my wonderful voice, of course, streaming over the interwebs. Thank you so much, George. I appreciate that. And welcome to another edition of Back to the Future Trading's TachEon Warp, our flagship product in use by thousands of customers around the world, trading every imaginable instrument ranging from forex, futures, cryptocurrencies, stocks and options, and commodities. We're glad to have you on board today and expose you potentially to a new method of analyzing your trades that's resulted in a 4.9 out of 5.0 Trustpilot rating with our customers over the last 13 years. I am the founder and co-owner here at Back to the Future Trading. My name is Michael. If you've heard any videos from us in the past, it's usually my voice that you're listening to. And even though the skies are cloudy and the February winter winds and miserable, misty, rainy junk is outside, I have a warm heart today. I'm excited to be here talking to you and teaching you about these things. They're some of my most favorite things to do. If you're listening to us and you've never purchased anything from us in the past, or you're watching this video in the future and wondering what's this all about, we have a special treat today. My co-host will be an actual customer who's used the program that I'm demonstrating to you here today. And in a moment, he's going to walk you through his experiences with the program, things that he's been able to accomplish with it, and share with those of you that are customers in the webinar ways that you might consider using it that are different from what I teach here today. So stay tuned for that. In about 20 minutes, I'm going to wrap up my brief presentation and turn the microphone over to Jacob and let him share that with you as well. So pretty cool. I'm excited about today. In particular, just describing what it is we do. How do we help people? If you're a customer who's been through the ringer, you've been in courses before, you've taken all of the $50 and $100 and $500 courses and subjected yourself to all the free trials and the weekends in Las Vegas and the litany of gurus, seemingly one after the other for years, and determined, like most of our customers and we here have discovered, that 90+% of it is junk and regurgitated garbage, you're in the right place. We are more cynical than you. We didn't believe anything anyone ever told us, and so today's presentation goes above and beyond. We are above and beyond reproach. The entire exercise that I'm about to show you in this next few minutes is entirely predictive, meaning my only purpose today is to just review the information you've been observing for the last 2 days. And so being able to give out predictive signals days in advance, both time and direction, being able to tell you how we'll trade them across those 2 days, and then coming together independently, hands off, full transparency, and see what actually happened, for many of you has been a life-changing event. No one does this. Most vendors will tell you after the fact what they would have traded if you only took their super secret platinum course. Their signals change, reappear, disappear. Their entire companies change, disappear, and reappear with new names, bankruptcy after bankruptcy. So hopefully today you'll find our presentation a little more compelling and hopefully give you something to think about. Every Tuesday, if you're a member of any of the Facebook groups I post into, specifically lately E-mini S&P groups on the Facebook pages, you'll notice that I send out forecasts well in advance of Wednesday and Thursday. We'll look at that page in a moment to see what it reveals. We'll give those times out 2 days before the webinar, along with a simple trading system to discuss what we'll do before we get there. And then on Thursday, we come together and we review what took place. We believe markets are not random. And because of our belief, our indicators behave differently. We don't use traditional lagging indicators. Most people who are losing money are using those tools. So imagine you're in a field where everyone who uses a certain piece of equipment or a sport, say for example, you're in NASCAR, you're a racing team, and you begin to notice that everyone who runs a Ford engine, for example, is always coming in last. And so you would say to yourself, hey, maybe we shouldn't put a Ford engine in the car. The Toyota people seem to be killing it this year. Why don't we put a Toyota engine in our vehicle? And so what we theorized, let me bring up an article here real quick, is that if the people who are making the most money consistently make those money, we should track those people. And so year after year after year, we began to determine that it was banks who were consistently raking in the big bucks. My mother-in-law would say the big bucks, the boku bucks. U.S. bank profit climbs 7.8% on higher interest income. And it's always the same names and the same faces. So what we do, guys, ladies, is we train a very intelligent piece of software, an indicator, over 12,000 lines of code in this indicator. It's not a MACD, it's not a moving average, it's not a volume tool. 12,000 lines of code whose job it is to search into the past and find times in the market you trade where banks are purposefully pushing prices higher and lower frequently. So mind experiment with me. If you were trading, let's say, oil futures, and you noticed every day for the last 2 weeks at 9:45, the price of oil went straight up for a complete dollar, $1,000 per contract move, and you saw that happen 8, 9, 10 times in a row, you would probably on the 11th day prepare a buy order at 9:45. It would be obvious to you. The reality is it's happening, but not quite as obviously as that. So this program is quite unique and wonderful in that it's able to determine the times lately where maybe not 100% of the time, but a lot of the time, prices are being driven down and being driven up. So for example, on Tuesday night, I crawled up here into my 3rd story attic super secret above ground bunker, and I sent out the screenshots for the 10 most popular markets, E-minis, cryptocurrency like Bitcoin, as well as foreign exchange currencies like the pound dollar, the euro dollar. And in this case, the E-mini S&P is a perfect example because it's the one that most customers ask us about first. Does this work on the S&P? Yeah. And the software, when it went out into the past earlier this week, it warned us in the future what times had the bank's fingerprints all over them. So in this instance, the Warp software was alerting us to behavior patterns that keep popping up lately. Maybe not like my 10 o'clock example, but often enough that an emotionless automaton, this robot with zero feelings, only facts, reported that 445, 621, 727, 821, 957, and so forth were all times that, for whatever reason lately, keep coming up as buying pressure times. There's a behavior pattern, an established behavior pattern. It happened enough times where a computer program said, whoa, 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 what's going on here? And then conversely, all of the times on the top of the histogram represent maximums, points in time where over and over again, not 100% of the time, but enough of the times where banks are consistently pushing prices lower. Now, I say banks, I can't prove it. I can't prove it's them beyond the suggestion that who else can move markets? Who else consistently manipulates markets? Who else consistently gets fined for manipulating futures and equities and currency pairs? JP Morgan, number one, the largest investment bank in the world, does. They have a track record a mile long of market manipulation. So if these times keep coming up as being pushes up and down, we have a fairly good idea that the people who make the most money and the ones who get fined the most often are probably the ones doing it. Now, that's all well and good, but the reality is this is a bunch of hokum. It's a bunch of nonsense unless any of the times that were projected to produce something in the future actually did something when we got there. Is it starting to sink in how ridiculous this is? We are putting it all out there as a company right now. It's a pretty bold statement. So on Tuesday, we were saying these will be the times that the market is likely to go up or down. Remember, from Tuesday all the way out into Thursday. And I'm not incredibly good at math, but that's 2 days in advance. It's a pretty substantial gap in time. As I mentioned earlier, I've been taunting people on Facebook who are particularly addicted to the E-minis and especially the E-mini S&P. And if you haven't had an opportunity, I would suggest if you're on Facebook, go ahead and join the group. I believe there's over 6,000, close to 7,000 members in here. And I'll post continually. And you'll see my screenshots come up often, and I'll tell people, hey, we're looking for a short at a certain time. And earlier in the week, on Friday at the close of business, I told people I was going to be short. And then I told them why, using the same signals. And then I've shown them signals using the same charts and techniques that I'm about to show you here today, using times that I gave them 2 days in advance. And the results, the reactions are almost universally the same. What is this? Who's heard of this? Anyone? Where do I find out more information about times? The most recent post telling people where I would get long based on the same daily signal, explaining to people that as soon as it broke the high, we were expecting it to continue even higher, and I gave people a target. And today we were in the profit of about $4,000+ using the same time signals. So that's great in a public forum, and I can, among thousands of like-minded people, sort of prove that this works. But on an intraday level, it's even more interesting, and I'm curious to see what everyone here thinks. Before we go too deep, I want you to see that the times that I'm referencing are the same times on my chart. For example, where you see 8:21, these are Eastern Standard Time Zone times. On my chart on the right, the one I gave out on Tuesday, this is the 8:21 signal on my actual chart. When you see here where it says 9:27, that is the 9:27 signal on my actual chart. And when you see the signal here that says 9:57, that is from the signal that I published on Tuesday. Anyone on our mailing list, anyone on the Facebook groups, I gave out the link and said, here are the times for Thursday. And I gave them that on Tuesday. But I wanted you to see, for example, where it says 11:12, that's a time that's existed in the public domain since Tuesday. And today is Groundhog Day. Punxsutawney Phil, kind of a jerk, came out and went, crawled back into his hole, said 6 more weeks of winter. Not a big fan, to be honest with you. But 2 days before he did that, we had these times to work with. So I'm going to take this screenshot and I'm going to pull it off to the right. So here's where it gets kind of interesting. And I'll go over these entries and exits here in a second. What we start to see is pretty overwhelming. For example, we were expecting more buying pressure at 8:21. And you can see for yourself what happened at 8:21. We were expecting that move to continue up until 9:27. And you can see with your own 2 eyes what happened at 9:27. And then at 9:57, we were expecting a move up until 10:24. We got to 10:24, it did not go down. It kept going up, and that's good news for us, and I'll tell you why in a moment. We were expecting that move from 10:24 to last until 10:57, and then an up move from 10:57 until 11:12, a down move from 11:12 until 11:48, an up move from 11:48 until 12:24. So these 3 put us back on track. 12:24 until 1:03. You can see the down move here like a zipper. Then 1:03 until 3:45. So at 3:45, we're up at a brand new high. It comes up and then it finishes lower than it started. 209 is an abject failure. It punctures through 209. No one's left in the buying area. And then we were expecting a down move to occur at 239. The market pulled up into the 239 candle and dropped down. It reverses and goes back up, and then we expected a move up at 354. So if we look at the software, we can analyze it through 2 different lenses. The first lens says, hey, what did the raw information produce? What percentage of the time was the actual signal near a bottom or a top when we were expecting a push up or a push down? Could I rely on this to help me get in the right direction of the move? And we see here, generally speaking, across the last 13 years, when I asked that question, can I say with any kind of confidence that about 60 to 70% of the time, the signal is near the actual high or low? Yes or no? As I go back in time, and I look at yesterday, for example, would we agree here in the room yesterday afternoon, we expected a move up at 209, a move down at 227, and then a move up at 236, a move down at 312, and a move up at 357. Does anyone know what was yesterday? Who knows what yesterday was? A couple other people. Who else knows what happened yesterday? This is the FOMC report. So I have a question. Here's a big question. Ready? Did I have the times for this market available, which was Wednesday, in advance? Yes. So I published this chart into the public domain on Tuesday night, the day before the FOMC. Now, for those of you that may or may not know, when you get near that report and it's red, it's expected to produce a big impact. My Forex Factory hover over that symbol says high impact expected. Roger, Esmeralda. That's scary, right? Ooh, anything can happen. It's going to be tumultuous. It's going to be a random cacophony of price action. Stay away, get out. Only the strong at heart should trade during that time. And so it's fairly, pardon my French, it's fairly ballsy for our company to come here and go, hey, I want you to watch. After lunch, right here, we're pretty close to the FOMC supernova, right? You put exclamation points all over here. Don't trade here. Anything could happen. There's no way we could know. Save the women and children first. And look at what happens. Look at what happens. What were we expecting at 12 o'clock? A down move. Says so right there. How long was it supposed to last? It was supposed to last until 12:51. And then we were expecting it to go up. And then what we were expecting? We were expecting the banks to push down at 148 and then push up at 209. And then push down when? At 227. Until when? Until 236. This is all after the report. Raja, does that look random to you? Everyone here can see the pullback, right? Everyone here could see the pullback. Did I get my chart? Where are you? I lost my 3-minute chart. Hang on 1 second, guys. I got so excited I hit the wrong function key. ES. Let me reopen that. Or we'll change that 5-minute back to a 3. Sorry about that. I got so excited I pushed the wrong button. There we go. So back here during FOMC, the software captured all of it. And that's where I took my trades. In the middle of an FOMC report. This is not a random market. Look at the balance of the morning. Up at 9:39, up at 10:03, down at 10:09, up at 11:18, down at 12 o'clock. It's kind of cool. So let's talk about the next level of this. And Jacob's going to talk in detail about how he uses the signals, but I wanted to tell you about how I trade them and how I teach people to trade them. You see, It's not enough to catch them with their fingers in the cookie jar. We've already proven now here on daily time frames, which can be useful for options, Tesla, Amazon, and the like, Meta. We can examine all of those markets and do the same thing 60 to 70% of the time. Be at the price at the time when they're about to stick their fingers in that cookie jar again and take our trades with theirs. But how do we formulate a trading plan? We're not buying and selling every signal, right? We need some kind of a filter. And my filter is very simple. It's a trend entry. When the moving average, a 120 EMA, is climbing, I'm buying. When? I'm buying at the buy times when the trend is rising. My stop is 1.5 average true range values away from the lower high of the candle. My entry is the close of the time signal, and I hold it until the opposite time. Enter at the close of the candle. Stop is 1.5 ATR values away. Exit at the opposite signal. Enter at the close of the buy signal. Trend is still up. Stop is 1.5 ATR values away. Exit at the close of the following counter signal. Hey, Gig. Good to see you, brother. So the signals with trend, or shorthand SWTs, right? Vendors love their acronyms. The LMNOP signal. I had one guy call his average the Optima, the Omni Trading Academy proprietary moving average. I still remember that stupid piece of garbage acronym. This is a signal with trend, and we're going to apply that to this chart in a second. There's a variation of the signal with trend if you choose to use this method. It's called a crossover. If you have a signal that's not a directional signal yet, and it closes above the moving average, we enter at the close of the candle, and our stop is one tick below the low of the candle that crossed over the moving average. It broke through the ice. We enter here, and where do we exit? The opposite time. So a crossover trade is a variation of a signal with trend. This is a crossover trade. Now there's one other setup that we're going to deploy here that I told you about in the emails I sent out, and it's on the page with the predictions. It's called a puncture. And before I teach it to you, I want to give you an example of visually what that means. I want you to imagine that we are George Clooney and Matt Damon, and we're going to rob a bank. And before we rob the bank in Ocean's 25, we stake it out. And we sit outside in our car with a pair of binoculars, and we look inside. And we notice that in the bank, there's a guard, and there's another guard over here. And the guards are dressed in blue. And we notice that the guards are there from 8 o'clock to 4 p.m. every day when the bank closes. And we look and we watch and we check. Every 30 minutes, are the guards there? Are the guards there? Are the guards there? Now imagine one time that we look inside the bank, it's 2:30, and that guard isn't there, and that guard isn't there. So if we look in the bank and Raja, there's no guards there, is it safe to rob the bank, or is it safer than it might have been to rob the bank? Are the odds in our favor a little bit more? Yeah. So what a puncture trade does is it says this: hey, the trend is rising. I want to be a buyer. Markets are higher and higher and higher. That's what the moving average is telling us. The trend is up. But it's 9:30 and the candle closed right here. There should be banks. There should be guards in the bank at 9:30. This blue dot is telling me the software found a behavior pattern. And when we get to 9:30, the market should start to go down, right? That's what we're expecting. Well, Mike, in this instance, it's 9:31 and we're a little higher. It's 9:32 and we're still higher. It's 9:33 and we're even higher. And what that's telling me is that the sellers that normally sell at that time are not selling. They're standing on the sidelines. Imagine watching a football or a soccer game and the offense is preparing to score and the other team sits down, or better yet, leaves the field. Where's everybody going? They're not defending the goal. Well, let's go try and score. Full steam ahead. So what I teach people is this. We enter at the stop line of the counter trend signal, like a breakout. I put a buy stop right here because this is now a failure with trend. There are no sellers here. I'm going to enter right here. I'm going to put my stop one tick below the candle that punctured the stop line. And I can use that if I want for a one-to-one risk-reward trade, or in our example, we're going to hold it until the next time cycle starts. This is called a puncture with trend. There's no guards in the building. They left. The cash registers are free for the taking. So let's go back to our example here from today. And all of a sudden, there's some opportunities available. We'll look at a full stretch of time. At 7 o'clock, the trend is down. There's a blue dot. It's a signal in the direction of the trend. We enter on the close of the candle and we exit by 7:27. It's a $3.50 move. At 7:27, the signal is below the moving average, below the moving average, below the moving average, below the moving average. At 7:45, it closes or crosses over the moving average. Our stop is below the candle, and we exit by 7:54. It's a $3 move. Puncture. No. A $3 move, crossover signal. Crossover signal. Doesn't quite go through the blue line, gets pretty close to it. We get to 8:21, and this is now a signal with trend. I enter at the close of the candle. My stop is 1.5 ATR values away, and I exit by the next counter signal, 9:27. That is a near $16 move. I'm watching with a buy stop here. It never crosses the blue line. It pulls all the way back down. We enter now, a lot of volatility at the close of the 9:57 signal. Big risk on this one, right? But it is what it is. We exit by the next signal, 10:24, the counter signal, for a $2 3/4 profit using the times that I provided on Tuesday and the signal settings, rather the setup rules that I provided with the times. Everything I've told you about was given to everyone 2 days ago. Now 10:24, we're looking in the bank and gig. There's no guards. There should be guards. Prices should be doing this. And Raja, they're not. They're going higher and higher and higher and higher and higher. And Matt Damon and George Clooney are in the car going, let's go. And the buy stop is hit. We enter here. Our stop is one tick under the puncture candle. We hold the trade until the next time at 10:57. That's a $9 move. $9, it's a signal with trend. Our stop is 1.5 ATR values away. We finish exactly where we started, no gain. Never hits our blue line. The guards are in the bank the entire time, and it ends up being a high. We move down into 1148, getting close to lunchtime. Some of you stop, some of you keep going. 1148, we enter, and we finish with a whopping tick higher by 1224. 1224 never crosses its blue line, and now, boom, 303. We're in. Close of this candle right here. There's our stop. There's our entry. It pulled back, but it doesn't hit our stop. 1.5 ATR values away. We exit by 145 for a near $2 gain. It crosses through the blue line, a puncture. The guards left the bank, but they came right back. Our stop is below the puncture candle, and we lose $4. Signal with trend at 2 o'clock. We enter at the close of the candle, immediately hits the stop. We give back $5. 239 comes. We enter at the close of the candle. It goes in our direction. It goes in our direction. Now here, we're $1,000 up in the trade. In the rules that I publish, if it's more than $500, we go to break even. And so while there's $1,000 on the table for the purpose of this exercise, I count it as a +1 tick. Same thing happens at 354. It's a signal with trend. We enter on the close of the candle. Our stop is 1.5 ATR values away. How high does it go? Boom. It goes another $1,000+ in our direction. And for the purpose of this exercise, I will count it as a break-even trade. What happened? Well, what happened is this, and Jake's going to take over in a second. 3, 6.5, 22, 24, 29, 31, minus 9 is 22. There are $22 of ES theoretical, probable, hypothetical movement locked in across all of those trades using the system I gave you 2 days ago, the settings I gave you 2 days ago. $22 times $50 per contract is $1,000 a day. 209. 209, is there a, I'm not looking at 209. That would be in the Asian session. Oh, 1409, sorry. Brain fart. No, because it was above the moving average here. Gig is asking if that would be a signal to sell. If you're an advanced user like you, Gig, what I would have seen was that stop was hit. When that stop was hit, it told me the sellers were in control. Gig, I would have assumed that was a failed signal and treated it like a sell. And then I would have shorted right here when it closed below the moving average, treated that as a crossover and gotten out right there. When it punctures like that, I assume the sellers are in control, and then I would have traded the crossover. But that's an advanced technique that I didn't publish in advance. Yeah. You're looking at it as an SAR, as a stop and reverse, and that's a correct philosophy, I think, for advanced users. Most of the people in here today are kind of newbies. But there's $1,000 worth of executions today on this chart. And it's not any different from what I'm doing in the Facebook groups or with you guys week to week to week. And so, you know, at the end of our experiment, all we're really doing is providing you an edge statistically, an edge that's based on the people who are consistently making the money. The banks, the institutions. I call them the crooks and the thieves. We want to be moving when they move. We want to be long when they're going to buy and short when they're going to sell. And most people are in the opposite side of the trade. They're selling when it's going up and they're buying when it's going down. Their stops get hit more often than their targets. And so we've established that the software has a statistically relevant edge. In fact, if you look across hundreds and hundreds and hundreds of executions, you'll see that trading in the direction of the trend has a significant edge. This is a customer's back-tested results using a similar signal with trend setup. That curve, that equity curve, shouldn't be climbing, going higher and higher if this doesn't work, if it doesn't have an edge. We shouldn't have a 4.9 out of 5 rating if the software doesn't have an edge. And we consistently come back to the fact that it does. And so as I introduced Jacob here out on the West Coast, our East Coast, West Coast love affair, I want you to consider, what is trading really? Because if it's about the past, then the lagging indicators you have are and should be quite useful. If it's about what happened 1 second ago, 1 minute ago, an hour ago, over the last 5, 10, 14, 50 bars, then yeah, keep doing what you're doing. But I don't think that's what it's about. I think trading futures or anything, options, it's about what will the market be doing a second from now, a minute from now, an hour or a day from now. It's an assessment of where will the market be in the future. We named the company Back to the Future in honor of Marty McFly and his sports almanac. Remember when he travels to the future and he sees the sports almanac in the pawn shop, and he knows what the scores of the games will be for 100 years or whatever it is, and he travels back to the present and he knows which horse will win at a game a year from now. He knows which football team will win the next 20 Super Bowls. He has an idea in the future what will happen. And so our software is an homage to that concept. It is better to be proactive, to have an edge on what the future will be. And it just so happens that the banks are providing all the tools we need, all the resources and behavior patterns to discover and leverage. Discover and leverage. So thanks for hanging out with me. What I'd like to do is introduce you to someone who's a frequent guest here on the show. His name is Jacob. He's a wonderful, brilliant young man. He's out there on the West Coast. He's probably knee-deep in kombucha right now, fresh from a well-deserved rest, and I'm glad to have him back. Jacob's been a long-time customer. He's a Warp user, an Aurora user, a Force user, and I like for him to come and share his insights, what he's doing and how he's using the software, let you know what he's able to accomplish with it. So you can hear it from the horse's mouth, so to speak. That's how you know how old I am when I use phrases like that. Jacob, are you around?
I am. How you doing, Michael? You're right. I'm drinking kombucha as we speak. I have a kombucha in my left hand. You knew. You must have known. Is my camera on?
I'm waiting for you to tell me that you're fermenting your own sauerkraut and growing your own cultures and doing all those things to be even healthier than you are out there. How are you feeling?
Yeah, not too bad. Not too shabby.
Was it good to get away and glisten in the snow and do all of your shushing and your carving?
Yeah, it took me some adjustments to get used to Southern California again. But I'm okay now. I'm fine. Everything's fine.
It's nice to be in a part of California that's not on fire.
Yeah, or with mudslides and 10 feet of snow if you got to drive your kids to school.
Yeah, I understand. It's either feast or famine. Well, I'm going to bow out here, guys. I'm going to let Jacob take over. He's going to tell you all about the stuff. I've given you the presentation there. Let me just see if you, yep, there's your screen. Feel free to pick Jacob's brain if you're a customer, ask him questions. He's available for mentoring if you want to get together with him and do some tutoring. He can do that with you as well. But thank you for your time from my end. I hope you'll carefully consider us as a resource and a company to partner with. And thank you for those of you that are customers that support us. We love you, we need you, and we hope these events are educational. So without further ado, guys, let's give our attention to Jacob, and thanks again.
Thanks, Michael. All right, can everybody see my screen and hear me fine and dandy? Nice, thank you, Jim. Nice. I'm gonna do my customary couple deep breaths here before I get started with you folks. Do 2 deep breaths and then we'll start looking at some charts. Thank you, Michael, for doing all that stuff in the beginning that he's just so good at it. It's kind of what he does. It's one of the things that he does. Anyway, I'm gonna take a deep breath now. Exhale. And one more, the trading day is over. Oh yeah, oh, it's so much better. So much better. Welcome everybody. Good to see a lot of familiar names. Yeah, nice. Nice, got a good amount of people here too. So is anybody here for the first time? I always like to try to kind of get a handle on who has the software, who doesn't, or if anybody's brand new. Did Michael just go that whole time without talking about the software and selling it? No, I think he did. Well, he might have hinted at it. I'm not a sales guy, but if you do want to buy the software, and I highly recommend it, the sales guy is Dave. And Dave will probably post his contact info in the chat. And you can also reach him on Skype or call him on the phone. I bet you he will post his phone number in the chat as well. Oh, nice. Okay. Brand new. Esmeralda, brand new. First time. Nice. Welcome. So yeah, my name's Jake, and I have had Back to the Future trading software, specifically Warp, actually, back 3 Septembers ago. So 2 Septembers, that's 2 years, September, October, November, December, January, almost 2.5 years now with TachEon TimeWarp. So yeah, I wanted to show you folks my opening range theory again. And I mean, I can't be the only one in the world to come up with this. I wanted to, just before I even do that, so this is what I think about for the first 15 minutes of trading. This is what I feel like is going on. Just total craziness, but you know, we can't see it. We're here at our home offices or probably by ourselves, and we don't see and hear what's happening in the, well, I don't even know if they're doing the pit sessions anymore technically, but there's that market sentiment. That's what I want to find. That's what I want to feel out. The first 15 minutes of trading is extremely important to my strategies. So I Googled it actually. I haven't even Googled it until while Michael was doing his presentation. I'm all about the opening range. What is the opening range? The opening range, or OR, describes a security's high and low price for a short period just after the market opens, often the first 15 minutes of the trading day. Day traders often monitor a stock's opening range because it can provide an indication of market sentiment and price trend for the day. So before I start trading, I always want to get a handle on what this opening range is. So let me just try to convince a few of you how important this is. before I combine it with TachEon TimeWarp. Now this is today. Okay, so this indicator is free of charge. It's on the NinjaTrader ecosystem. You can just Google just opening range. You get on the NinjaTrader ecosystem. You know what? I'm gonna show you how to do that. I gotta just relax. I got a weird text message from my brother right before I started talking about my other business, and I just gotta chill for a second. I gotta ease into this. I shouldn't have looked at my stinking phone before I started. Okay, so let's just Google it real quick. Let me find it. I just realized that I have to actually go to my other Google login. Ninja ecosystem user app share. Here we go. So if anybody's not familiar with this user app share, get familiar with it. There's a lot of cool tools in here, all for free. So let's see, opening range. Oops. Opening range. There it is. I think it's this one. 5,300 downloads since 2019. So you just go to NinjaTraderEcosystem.com, user app share, opening range indicator. Search that. I believe this is it. It's either this one, they're all the same, or it's this one. I don't know, it's one or the other. Not rocket science though, but yeah, check that out. And this is what it looks like once it's printed on the chart. You can do this by hand also, you know, you don't need the indicator. All it does is just print the high, the low, sorry, high. I gotta fix my drawing tools here, 1 second. Stay in draw mode. The high, the mid, and the low of the first 15 minutes. So here's the high right here. There's the middle, of course, and then the low actually must be the opening bell. Sometimes that happens. So the market opens here, 9:30. Yep. So I'll just show you the settings on this real quick. Opening range indicator, 9:30 to 9:45. You can set that time to whatever you want. This is what I do for day trading on the NASDAQ 5-minute. I'm not sure how well this works on other instruments. I pretty much only trade the NASDAQ, and it works fantastic on the NASDAQ. So I'm going to mute myself for just 1 second and clear my throat so you folks don't have to hear that. 1 sec. All right, that's better. Okay. So I just have mine set to all black. Is that making sense to everybody so far? Pretty simple. So let me just show, we'll just look at today. So I'm not cherry picking. Then we'll look at a couple extra days as well. So notice, let me just spread it out here. This is the 5-minute NASDAQ or micro NASDAQ. These bars are 150-second bars, so we can see a little more detail. I have 2 data series on this chart, but all I'm trying to do right now is just show you folks how sick this opening range theory is. Notice the consolidation. Notice more consolidation. Notice how the resistance starts to form, and then we have that rising wedge. Okay, well, that's pretty cool, I guess. But what about all the rest of it? What about the rest of the day? Watch it come down right to the mean. To me, the VWAPs and all sorts of whatever indicators, like to me, the mean of the day is the middle of the opening range. So that's what I think the price is always attempting to revert to, personally. Or maybe the top or the bottom, but somewhere in the opening range, that's the mean of the day, as far as I'm concerned. So that seems pretty obvious. Let's look at yesterday. And I'm going to add something on the chart too. Yesterday's was crazy, of course, because it's an FOMC day. But watch how the price just stays in this opening range. This is yesterday. I mean, it's insane. I mean, I don't even have to draw the boxes, right? Pretty obvious. And then it stays up here, bounces off the middle, can't quite get down. And then it does a false breakout here, comes back up, back down again, comes back up, can't really quite make it over the middle, almost gets to the top again. And then right when the FOMC starts, it wicks and takes out everybody's stops. And then right to the top of the opening range, and then whacks everybody down, and then right back up again. So that's all well and good. Clear all drawing tools. But if you do this and add what I call GAN octaves, call it whatever you want, splits, 50% split to the top of the opening range and 50% split to the bottom. Or you can think of it as splitting the opening range into 4 sections. So I'm going to grab a fib tool. I'm going to load my GAN octave tool. This is just a fib tool with 50%, 100%. I'll show you the settings. Let's see, let's use. I'm really all about making my custom fibs. Let's do this one. Oh no, let's not do that one. I'm just gonna do the regular one. It's a little cleaner. Okay. So we're just gonna place the bottom of this fib tool on the bottom of the opening range. And then we're gonna just expand till we have 4 standard deviations. And then I'm gonna add TachEon TimeWarp to this, and it's gonna make even more sense. So 1, so we can see we have 4, well, let's do it this way. 4 separate sections, 1, 2, 3, 4. I call these standard deviations. So to me, that first 15 minutes sets the tone for the whole day from 9:30 a.m. to 45, right about there. Yep. So this section right there sets the tone for the whole day as far as I'm concerned. Now, if we go back and we look about how this day played out, we can start to see some more interesting things. I mean, what day is this? This is today. Look at the consolidation right up here. We're just hanging out right in that band. I mean, there's that, I already showed this, but there's this obvious consolidation here. Another consolidation. But the key is how to pick when the how to pick when the turns are going to happen. I mean, you can see it. I see it everywhere now. Oh man, I really shouldn't have looked at my phone before I started this. All good? All good. Who else is here? Anybody? Oh, what's up, Weston? I might get Weston to do a little bit of a 5-minute session on the mic here in a little while. Let's see. Okay, where was I? Jeez, crow. Hold on a second, everybody. Hold on a second. I gotta mute myself for a sec. All right, so let's look at yesterday's opening range as well. Just to paint I just want to make sure that the picture is painted as well as I can paint it. well, before that, I got to get rid of this. I want to just get you folks having a little bit of faith in this opening range theory. And you can just Google it. I mean, it's nothing new. This is yesterday. So we're only going to look at the 2 days because these are the once I add TimeWarp on top of this. These are the signals that came in the emails that some of you received and have been posted on the website since Tuesday night, I believe. Okay, so we're going to do that same thing. I'll get my fib tool out. Template, load. Regular Gann octaves, load, apply. So they're just, you can use 50%. I don't know why I was using thirds here. Really don't know. So, and then we'll split this up into 4 sections. This is yesterday. So I know that the standard, after the first 15 minutes of trading, I know that the standard deviation for yesterday was 56 ticks. I believe today's was something like 60. You know, if something like an FOMC is forecasted in the afternoon, you're going to want to adjust your standard deviations. Like I ended up using 2 standard deviations for a trade, but we'll get into that in a second. So just look at the consolidation here. That's all I'm saying. Price comes up, hits the top. Here's the bottom. Then it consolidates here, comes up, hits the top. There's that false breakout. To the bottom. We already went over all this, but I wanted to show you what happens when we get higher and break out of the opening range. You want to use two standard deviations oftentimes, or just don't trade the FOMC. Depends on how much how big your risk tolerance is for the day, I suppose. Okay, so let's clear our drawing tools, and we're just going to show you how this fits with TimeWarp. Let's go to today. Oh, you know what? Before I do that, I went over this last week. Did I do the webinar last week? No, the week before. Maybe I should just build the chart from scratch. So yeah, I think it's worth it. I think it's worth going over all this stuff again. So you can watch the webinar from 2 weeks ago, not last week, the week before. But I'm going to go over this again. So the goal is to get the chart to have 2. Let me get rid of the picture here. No image. Okay. Get this volume profile out of here. Just messing around with that. I don't actually really need it. I don't use it. So this is just another fib tool that I made. This one I have these purple lines in between instead of just the regular. So this is the opening range inside this purple band here. You may be wondering what the heck is going on with this chart. So if we look closely, let's zoom in. We'll see that there's two sides of candles on the same exact chart. The large bars behind are 5-minute bars, and the turquoise and dark orange bars are the 150-second bars. And to do that, it's actually pretty simple. You just go to data series. You already have your 5-minute chart loaded, and then if you want to add another chart, 50% of 5 minutes is 150 seconds. And then you just come over here and you do seconds, not minutes, 150, load the same amount of days as you have for the 5-minute. They should both be 30 days. And then the only other things to change are the colors of the candles. And then you're going to want to tell it to, where is it? To print it on the same panel, not a new panel. A new panel will print it down below. So we'll just say panel 1 because this is panel 1. And then click apply. And okay. So the idea with these two sets of candles, and you don't even really need the to be able to see the 5-minute bars. It's just if you're using patterns, you might want to be able to see the 5-minute bars to know where your 5-minute highs and lows are. So basically what we're doing is we're using the 5-minute signals that are the warp signals that are generated from the 5-minute chart, but we're trading, our entries are based on the 150 seconds. It's a 2.5-minute bar that we're going to enter on. So you know what, just for presentation purposes, I'm going to go into data series and I'm just going to make the 5-minute bars transparent. I'll make everything transparent because we don't need them. Transparent, and candle wick, we'll make that transparent. And now we should see those disappear. There we go. So what remains is 2.5-minute bars on a 5-minute chart with standard deviations based on the opening range. Now, if I'm going too fast for anybody, you can always slow the video down or book a mentoring session with me, do that on the website. But let me show you how the theory works here. I'm kind of sick and tired of trading the first 15 minutes. I do it sometimes, but mostly we'll just wait. At least I want to wait for the first warp signal. So the idea, I'm going to try to do this without patterns, just blue dots, white dots. Let me just fast forward here. I keep forgetting that there could be people that don't have any idea what a blue dot or a white dot means. So this 7th, oh no, Michael already went over that. I'm so not used to Michael doing the first part of the video. Everybody should know what a blue dot and a white dot means. Blue dot means down, white dot means up. The moving average that I use on this chart on the 5-minute is a 21 period whole moving average. And that is attached to the 2.5-minute time frame, not the 5-minute. So I'm pretty sure they have stuff on the NinjaTrader ecosystem, but if you go to, I think it's Back to the Future as a YouTube page, or it could be on their website, you can get, I believe it's still free. It's called TachEon moving averages. Oops. Color MAs. So it's 21 period whole moving average, and it's attached. My input is 150 seconds. So whole moving averages already move really fast. Oh, look at that. Huh, I already did that. Go away, phone. Go away. I'm trying to do things. So 21 HMA attached to the 2.5-minute chart, 150 second. So it's going to be very reactive. And I don't care about closes above or below the moving average to quote define trend. I just care about the color. So this is real similar to all the other strategies that I've taught. Actually, this strategy, I think I've taught this one on the webinars before at some point. This is probably my favorite out of all of them, because you know what I know what my profit targets and my stops are going to be all day long. They're going to be 70 or no, I think today, let's get that a little more accurate. I think it was like 66 or something. Yeah, I had 66 ticks for profit targets today. So one standard deviation, I was calling it 66. Then you can go in your ATM strategy and just set that up. If you want one position or two or whatever, just 66. Today I was going super simple, and I was simply just doing that. 66 top stop loss, 66 profit. That's it. Okay. We actually don't need that on there. Okay. Let me give ourselves a little bit more margin here, and we'll go over the system. Nice. Okay, so let me just find one that, oh, it looks like it works right off the bat here. Oh no, we need a blue moving average. And perfect. Okay, so here we go. So just like all the other systems, we need, so a blue dot, that's selling. We need blue HMA, and we need a candle to close below the open price line. This line right here, for anybody who doesn't know, is the open price line. Orange candles close below. Turquoise are bearish candles. Turquoise candles are bullish candles, and they close at the top, of course. So here we can see that we do have our 9:40 a.m. selling signal. We have a close below the open price line here on this bar, but we still don't have a blue moving average. Here we do, but it's an up bar. If you're going to short, you definitely want a down bar. Otherwise, I mean, you could, we're going to do just, got to have a down bar. So this candle here closes below the open price line. Our HMA is blue, and we're in a selling window. There's our three things: blue, blue, close below blue. Now we want a pullback to the standard deviation line that's above where that, I'm calling this our entry candle, where that entry candle closed. So not this line. If this candle would have closed down here, then we'd be looking at this line to place our limit order. So our candle closes here, and we want a pullback to this line, and then we're going to want to target to the line right below. And if anybody trades the NASDAQ like I do, this happens all the time, all day long. It's just about trying to get more right than wrong, really. 1-to-1 risk reward ratio, and the NASDAQ just constantly wicks up and down these standard deviation lines all day. It's going to go one way or the other. So in this case, we come back and we don't, oh, this is perfect, actually. I'm glad that that happened. So now we have, so we don't pull back to this line where we wanted it. And now we have candle closing below the next standard deviation line. So now we're looking for a pullback to this line. Our HMA is still blue, and we're still in our 940 selling window, right? So now we want to pull back to this line, and we get it right there. And it looks like we probably would have wicked right back down to our target, definitely here. So our entry is right here. And I'm going to get some verbiage on here too for us. That's our entry. Our stop is one line back. I'm just going to make this red so we know it's a stop. All right, I think I'm starting to relax now. There we go. And our target is just one line down. Super simple. I find this a very relaxing way to trade. I'm never surprised on what my risk is going to be. We're going to make this green. And what my target's going to be. It just always is for the whole day. I know that it will be 66 ticks unless there's an FOMC or something crazy in the afternoon. Then I might wait for a couple bars and possibly readjust to 2 standard deviation lines or something to that effect. You know, we could base it on ATR. This is just a regular average true range bar graph here, and it's attached to the 2.5 minute as well. So like here we can see that we're at 153, which is pretty big. It's pretty big, definitely bigger than a lot of days, but it's right in there. Again, so our candle closes here. We look for a pullback to this line, our entry. Oh, geez, entry. Let's see if I can entry. And our stop is here. Only one position. And target. Target, entry, stop. So we're filled here. It looks like we pretty much hit our target right here. I like to front run the target by like 5-6 ticks, and I also like to front run my entry by a few ticks. I have a rule that if the candle before the entry candle closes on the line, I'm just gonna take the trade at the line. I would rather have a pullback though. Hopefully that makes sense to everybody. Blue HMA, blue dot, close below our blue open price line, and then we simply, so that's all of our three locks or doors are open for shorting. All we need is just a candle to close below a standard deviation line and a pullback to the line above, and then our target is below. So in this case, oh, I wonder what we made. 66.6, because that's what it is all day, unless there's some crazy news event in the afternoon. So we'll back test today and yesterday, because those are the signals that were on the website pre-forecast. Excuse me. No way to. Now, there's all sorts of other ways that we can trade in between these dots. You can use something like splits in thirds. You can split in half. You can split in quarters. I'm not gonna be really getting into that. But you know, if you want to book a mentorship class with me or something, we can get into that detail. But honestly, you don't even need to do that. It actually makes it for a pretty relaxing trading day if you only take one trade per window. So there's 9:40 and it's what, 10 o'clock? Now we don't have anything to do until 10:45. Go make a sandwich, have some breakfast. It's one of the most beautiful things, really, I think, about TachEon TimeWarp. My whole trading life changed once I got this software. No longer do I actually have to sit and stare at the screen, not knowing when my trading opportunity is going to be. Yeah, I didn't know when my trading opportunity was going to be after 9:40, but I know that I don't have to come over to the screen until 9:40. And then I know once this trade executes and finishes up, I don't have to come back to the screen until 10:45. What a great way to stop over trading, right? Over trading, oh man, commissions really can add up fast. It's kind of crazy. All right, so white dot. A lot of you will be looking at this white dot and think, oh geez, that's pattern 5. That means the price could go down. Well, I'm trying to do just white dot, blue dot with an HMA. So white dot still means buying. Let's see if it works. So there's our buying time, 10:45, white dot. Our HMA is already white, so sweet. And now we need to close above the open price line. Nope. Yep. So now all 3 locks are open. All 3 doors are open, and we are ready to look for pullbacks. So here is our open price line. We'll call that our open price line close above confirmation candle. HMA white, white dot. We are all clear. Ladies and gentlemen, all clear for a takeoff. So now all we need is, let me just zoom in a little bit more actually. Oh, that's a nice view right there. Okay, so now we need a pullback to the line below. Pretty simple. Do we get it? Yep, we do. And you know what I love about this system and using these standard deviation lines? I've taught a few other strategies on these webinars, but with those other strategies, you got to be willing to sit through. I mean, with any strategy, you got to be willing to sit through some redness, some red ticks, some red points, some negative balance sheet. But with a system like this, oftentimes, man, like the order will get hit and then it'll be green. Even if it turns red right after that, I just want to see a little bit of green right at first. It really helps my psychology. So in this case, we're looking at candle close, bam, takes the order and shoots right back up. That's not to our target yet, but 2.5 minutes later, we're already at 44 ticks in the positive. With other systems, systems that I've taught and used, we could be down 50 ticks and we're waiting for a target way up here. I mean, just to be honest, like I have debated whether or not to even share this system because it's so freaking good. It really is. It's as far as Warp goes, it's definitely my favorite system. And I've been teaching some people this system, and they've been having great results as well. So there we go. Okay, so let's get. It's going to grab copies of this. So our stop is one line below, remember? Okay, I think I'm getting warmed up now. Above. Entry, don't worry, I'm gonna zoom back in. So now we're looking for, bam, that didn't take long. That took 5 minutes. NASDAQ 5-minute chart, to me, it's really the cream of the crop. This actually works quite well in the 3-minute NASDAQ as well. But we're almost kind of trading 3-minute bars. These are 2.5-minute bars. And there's something that I really like about splitting time in half. You know, everybody talks about Fibonacci, 50% retracements and extensions and 50% this and that. Not a lot of people talk about 50% time. Like, oh, I'm going to trade the 5-minute with a 1-minute chart and look for pullbacks on that. Like, I don't know if I've ever heard of anybody trading with 50% time. And I don't know, it works really well. So there you go. And our target is complete here, and we're done. Go take a break. 66 ticks. Every one of these you can just call 66. 66 standard deviation. What happens through the rest of this window? I don't care because I'm not going to be here. Geez, I don't have to come back to the screen till 12:15. Dude, what other kind of trading software could you buy where you take one trade? You already know that between 10:45 and 12:15, you're only going to be able to trade once with this system, only one time. And your next opportunity where you're required to come back over to the computer, if you haven't already hit your goal, by the way, I actually recommend, if you're trading NASDAQ, you've already made like 500 and, I don't know, almost $600 with just one contract. Maybe you only want 2 winners and you're done for the day. Maybe you want 3 winners and you're done for the day. So if you had a win and then a loss, right, then you're back to 0. And then you have 1 win and then 2 losses, then you're -1. And then you need 3 winners to be at 2, you know, something like that. I mean, let's just get out the calculator real quick here. Where is it? With just 2 winners, this is actually what I did today because I needed a break. I just needed a break. My hand was getting all weird, and sometimes my hand gets all swollen from something, a mouse or something, I don't know. But 66 times 2 winners, that's 132 ticks times $5 a tick, $660 with just 1 contract. And your risk per trade, this is the most awesome thing, I think, times 5, you know that your risk for any given trade is $330. So I mean, it could be argued that you could do this even on the NASDAQ and not micros on a moderately sized account. I'm not going to give any advice on what size account you should be using for something like this, but I mean, I trade other people's money. I trade Apex. So also, if anybody wants any mentorship on that kind of stuff, let me know. Speaking of, before I forget, the best way to get a hold of me is Skype. Share profile. Here's my profile on Skype, Jake Royall. I think you just, Jake Royall, no space. If you just search on Skype for Jake Royall, JakeRoyall, then you'll find me. I guess you got to wave at me first that I accept your request, and then we can chat. We can set up a meeting or whatever. Okay, so 12:15. What's going on at 12:15 here? Let's check it out. Hopefully this is making sense to everybody so far. Let me look at some questions here. Just and see. One of my clients, students, says that he's surprised that I'm sharing all of it. I know. So am I, actually. But I want people to be successful. I want people to be able to trade something that they can trade comfortably. You know, I prefer a system like this to dot trading, you know, just like, but it can be done, you know, and Warp actually does have a positive expectancy, even on like a dot trade, for instance, like would be, you know, like here you would have entered with the HMA here, and then I don't know, would have gotten stopped out. Like, I mean, you're looking at like really big risk, but then you would have been able to get back in here, and then you would have made back almost half of that. Yeah, I don't know. I just want everybody who purchases the software to have options. So go back and look at there's one of the reasons I like showing different strategies is, you know, this strategy isn't for everybody. Some people can't stand limit orders. They'd rather market buy or market sell. And, you know, if you go back and look at my other videos on the Back to Future Trading YouTube channel, you'll see other strategies that might work better for you. Okay. Plus, I figure that, I don't know, if somebody really wants to trade this system, they might want to book a mentorship session with me to make sure they understand the nuances and whatnot. I mean, but this is, I mean, you could do it with just what I'm going to share here. Okay, so 12:15. Focus, Jake. You can do it. Okay, so 12:15. That's a sell. That's a sell window. It just alternates buy, sell, buy, sell, buy, sell as far as the time windows go. So 12:15 is a sell time, the start of a sell time window. But as we can see, our HMA just flipped white. Let's see what happens on the next candle. HMA is still white. We got a candle closing below the open price line, but our HMA is white. So we're not looking for anything just yet. Still no. All we need now is just the blue HMA, and we can look for pullbacks. Nope, nope, nope. Okay, so this is interesting. So Michael was sharing the stop puncture setup. This is a stop puncture on a 200 on a 2.5 minute bar. As you can see, this bar does indeed puncture the stop line. And just so everybody knows, I have no idea if this trade's going to work or not. Sometimes the puncture trades can be a little scary for me. I'd rather not have to deal with the puncture trades, but they can also be quite nice. So we'll go to indicators. I just want to show you folks my settings, TimeWarp. And if you book a session with me, I'll give you, my workspace and just make sure everything gets set up for you real quick. Warp, of course, it's calendar days 7/14, swing 8, just like all of the webinars. Those are my settings for the dots. That's what Warp is looking for. But my stop offset ATR multiple, it's not 1.5, it's 0.75. And my look back period though is still 7 bars. And this is looking at 5-minute bars, not 150, because my TachEon TimeWarp, as we can see, is connected to the 5-minute chart. 5-minute chart. And my moving average here on Warp is none, because I am using the color MAs for my whole moving average, because I want that HMA to be very fast and reactive, so I have it attached to the 150 second. Okay, so we have a puncture and we have a white HMA. So that means we're actually all clear for longs. So we're going to be looking for a pullback to the line below. White HMA, stop puncture. We don't need this arrow. And that's no longer a sell window, it's now a buy window. The banks didn't show up. Okay, did not happen there, no. Oh, there it is. Okay, so we pulled back. So we entered here. Now we're looking for a pullback to the line above. See if it happens. Oh, just yes, sweet. That's 3 winners. Be done for the day, Jake. Be done for the day. Your stop is down here. Your target's 1 line above. Does that make sense? It's almost too easy. It's like taking candy from poor innocent little kids. No kids are innocent. Can you tell them, Dad? So that's another win. That trade, hopefully that trade makes sense for everybody. We experienced some heat here, probably like 45 ticks. No, 50 ticks of heat. So that was kind of scary. Maybe you have a system where you move stops to break even at halfway to target 1. I'm sick and tired of doing that. I'd rather just take the dang on loss, because too many stops at break even. I don't know if you're using multiple positions, that's probably fine, but too many stops at break even just using one position, and I'm going to get all revengey. So as we can see, we did not get stopped out by, geez, almost 20 ticks. So this was another win. 66 ticks. Okay, and now 105 is here. The 105 window. We just finished this trade, and oh look, oh, well, we might as well stay in the seat because our next opportunity is right here at 105. Now we need a close above the open price line. Our HMA is already white. Now we just need to close above the open price line. Why am I not in draw only? Stay in draw mode. There we go. All right, so if we get a close above the open price line on the next bar, we can look for pullbacks. Nope, didn't happen. Nope, 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 nope. Nope, that one. Nope, did not close above. That one did not, this one did. Okay. So now we have to get ready for a limit order on this line. And then we're simply going to look for, oops, 1 line above. Our stop goes below. Target is 1 line above. Let's see if it happens. Oh no, did not pull back. It didn't pull back. So that means we have to move the whole set, the whole apparatus, if you will. I could probably just make a fib tool for that. This candle is the next candle to look for because we did not pull back. All right, so now we're looking for a pullback to the line below this candle. Yeah, you're right, Weston. I can't believe I'm sharing all this. But why not? What are you guys going to make it so my trades don't win anymore? No. I like sharing this stuff. I want to hear people sending me emails and Skype messages saying, dude, oh my gosh, dude, it was, oh, so thank you for sharing this. And I actually do get emails like that quite often. All right, so pull back to the line below. Did that just take it? Remember I said I front run by like 5, 6, oh yeah, it definitely took it. Look at that wick. The wick came right actually through the standard deviation line. So absolutely 100% would have filled our limit order, well, especially a mid order market if touched. No doubt. All right, and now we're looking for a target up here. Bam, look at that. How long did you have to wait? 5 minutes. Bam, look at that. That's a thing of beauty right there. So this is our signal candle, or our candle of significance. And our entry candle is this little guy right here. And that's 4 winners in a row. Should we look for another winner? Let's see. That's like $1,000 That's like $1,200 to over $1,200 after commissions already. So when's our next dot? And for anybody who does not have Warp, guess what? It costs money for this software. But also guess what? It's totally worth it. I've never had buyer's remorse. there's so many different options too. There's like a payment plan you can set up with some finance company. Call Dave, he can give you deals, maybe even throw in an hour of mentoringship with me for no additional charge. Who knows? Talk to Dave. Speaking of Dave, there's his phone number. Look, he posted it, 727-742-2626. All right, so the next window isn't till 250. I think this, yeah, right at 1400. Again, there's ways that you can trade these in between signals. And then you can split the splits and on and on and on and on and on. But you don't need to do that. Just take one trade per window for now. All right, so 250 is a sell time. A lot of you will look at this and go, dude, that's a pattern 4. Yeah, it is. That is definitely a pattern 4. That is the most obvious pattern 4 that I've ever seen in my entire existence on the planet. But we're just doing dot to dot. Blue dot means selling with this system. And as you can see, quite beautifully, we have come all the way down from 1400 hours. This is all East Coast time, all the way down. And where did we actually bounce? Where did we put in the biggest bull bar? Right at 250 on time, right at the top of the opening range. Wow, what a concept. It's almost like it was planned. Almost like it. All right, so to sell this, kind of sounds dangerous. I don't know if this one's going to be a winner. I mean, maybe it's going to go up. I don't know. Well, there's a blue dot there. That means Warp has seen selling action at the 250 time in the past 7 to 14 or more days. So selling our HMA is already blue. So all we need is a close below the open price line and we can short. No, yep, there it is. I'm scared. It's already 4 winners in a row. Can we really have 5? Let's find out. So there's our candle of significance. I'm going to bring my little tools over. Okay, and now our pullback is going to be the line above. So we're looking for, there's where the candle closed. So we need to pull back to here. Nope. Now we got a candle closing below the next standard deviation line, below this one. Almost closes right on it, but it doesn't close below it. So now we're still looking for a pullback to the line above that. Does not happen. This is one of those ones where the sucker closes right on it. So most likely I would have had my limit order like this. Oh, where's it going to close? 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 Is it going to close up here? Is it going to close down here? Is it going to close up here? Is it going to, bam. And then as soon as that candle closes, I'll have placed my limit order right there. So maybe that would have gotten filled. I don't know. This is one of those ones you'd have to use market replay to really make sure that it's as accurate as far as back testing goes. So we're not actually getting a pullback at all. We're just pulling back right to where the candle closes on this one. But our target is still going to be down here. And our stop is going to be here. I honestly really have no idea if this trade works or not. We'll find out in a couple seconds. Oh, look at that, it does. So again, let's zoom in. Oh, look at that, it actually does, if we zoom in, it actually does indeed close below the standard, this standard deviation line here. There's our close right there. So we had a close and then we pulled back just barely right to there. And we took a little bit of heat. We took like 35 ticks of heat and then all the way up to here, 48 ticks. But that's why our stop loss is 1 standard deviation line above. So we got filled either here or here. You can look at it either way. And again, 5 minutes later, 66 ticks. All right, and then I think that's it for the day. Yep, I'm not going to take a trade at 4 o'clock. The day's over as far as I'm concerned. So there you have it, folks. 5 winners today. I wouldn't expect that every day, but that's pretty sweet. 1, 2, 3, 4, 5. Life-changing. Life-changing stuff here. I finally have put all my 2.5 years of experience with TimeWarp and over, geez, probably getting close to 6 years of trading all together. Now, without the lower time frame candles overlaid on the 5-minute chart, a lot of these, 5-minute bars, like if we put them back on again, just so we can, oops, I don't want indicators, data series. Go to data series. 5-minute, color for down bars. Black, color for up bars. Transparent, and then we'll make the body outline dim gray, make it 3. And then the wick, we'll make black as well. So there's our 5-minute bars below. With some study, you'll be able to see that we would have been really late on a lot of these pullbacks had we not used the lower time frame overlay. I mean, I can just tell you right now on that one, we would have been late. We probably would have got it on this one. Yep, we would have got it on that one. Let's see if we would have got it on this one. Yep, we would have got it on this one. Anyway, hopefully you get my point here. Maybe you don't need it. I like it. Yeah, because it's these candles between. So every other candle, we have an opportunity to get in and to have a close above or below a standard deviation line. So this candle here, this middle candle, that doesn't exist on a 5-minute chart. So we have a whole extra opportunity. We have 100, what is it? We have twice the amount of opportunities to enter on pullbacks with this lower time frame overlay. Hopefully that makes sense. No, that's right. Yep, no 15 tick buffer. Swing is 6. I mean 8. Swing is 8. Swing is 8. Swinging 8. Calendar day is 7/14 as always. Just looking at some questions here. What ninja tool do you use to figure out ticks gain or loss? I don't quite understand the question, Raja. I mean, this is the ruler. This is just the ruler. So this is the toolbar indicator, or you can go to drawing tools, and it's up here called ruler. I have my hotkeys set up to control space because I find it's much faster than whatever the stock hotkey is. Ruler. So you just click ruler, and then I have mine set to ticks. I think they come set up as points or price. So you can just right click, go to properties, ticks, currency, pips, whatever you want. I do ticks. Okay. Only take the first, Roger, another question. Okay, hold on. Only take the first trade in that time window. Yes. Oh, Jim's back. Nice. Yeah. Okay, so this was what, 5 wins, how many? I'll be able to blast through the next day, and then we'll call it done. And then I'll give you Gabe's number again and show you the website and how to buy TachEon TimeWarp. 1, 2, 3, 4, 5 winners. Where is it? There it is. 5 times 66 ticks each equals 330 ticks times $5 a tick, 1650. 1650 profit hypothetical. And what's really cool about that is our commissions, since we're only using one contract, would only be 5, 10, 15, 20, 25 bucks or so. So under 50 bucks worth of commissions for 1,600 something dollars profit. Okay, so let's see if I can get rid of it. Yeah, we can just get rid of it. Well, I kind of want to, here, I'm going to take a screenshot of this because that's pretty cool. Save it for later or something. One for the record books. Just add a little bit margin back on. There we go, screenshot that. Nice. All right, so now we're gonna clear all drawing tools. Yes. I must have this locked. All right, now let's go check out yesterday, and this will go a lot faster. I like that there's no questions on the strategy. It means people get it. I mean, it's really nice that there's no you don't have to, no patterns. Blue dot, white dot. Let's see if, I mean, yesterday was horrible as far as range goes. You know, I actually like ranges nowadays because of this method. So let's go into die series and turn those 5-minute bars off again. Transparent, transparent, and outline, transparent. Okay, so now we're only looking at the 1/52nd, the 2.5 minute, if you will. Now I'm going to get my fib tool back out. We're going to draw our standard deviations, properties, template, load. I like that purple one. Where is it? Package it up. What it is. Following profiles and plus. I think it's this one. Nope. Got too many. I got to clean this thing out. Where is it? No, maybe I saved it as this one. Nope. 1 second. Hold on. I'm going to make one more shot. Oh, there it is. Nice. Okay, so we'll just pretend that our first 15 minutes has elapsed. It's like right about there. The low and the high. There we go. Looks pretty good. So I don't know. Our 940 signal, I guess let's just take a trade whenever the trade comes. So we have a blue HMA, so we're not allowed to go long yet. There we go. Now we're allowed to go long. Let's see how accurate I have this. Let's look at the bottom. It's important to be pretty accurate with this standard deviation thing. And we'll also be able to see what our, there we go, right there, it looks good. Lock it. Standard deviation for today's trading shall be 56 ticks. I think I was doing 55 or something yesterday. Yeah. So in this case, we close on the line. So following the same rules that we had for today's trading, we would basically just like look for a pullback right on the line. Let's see if that, there we go, and target. Again, so our entry was a pullback right on the line. And our target was here, HMA, white, open price line, closed above was there. So we're already set for that. And we are in a buy window. So that's one winner. Now we need next window. Interestingly enough, we probably would have even gotten close to being filled here, even if we waited for that pullback. And then we would have been only like 3 ticks away from the deviation line if we were even late on that trade. Like I said, I always like to front run by like 5 ticks, something to that effect. Okay, 10-8, 10-10. Looking for a close below the open price line or a close above the dot price line with an HMA. Nothing. This whole window, we got no trades. 0 trades. Okay. 1040, that does happen sometimes, especially on FOMC days. Their news event is like at 2 o'clock or so. There will be a lot of chop for most of the day before that event. 1040. So here we go. We have a close above. White open price line. White dot. This candle closes above the open price line. Now we need to pull back all the way to this line. See if that happens. It does. Now we need a target up here. Let's see if that happens. Oh, nope. Okay, so we have our first loss. Good. Now it sounds like a system that is legitimately real. 55. And then what happens right here? So this is one instance where you can actually take 2 trades in a window because now this is a short. Blue HMA candle punctures the dot price line. So now we need to pull back to the standard deviation above. There it is. And I believe that would have filled us short. Yep, oh, definitely. So we've recovered our loss on that trade. Yay. Now we're looking for the next window. Not till 12 o'clock. Blue HMA, blue dot. Need to close below the open price line. There it is. So now we're looking for pullbacks. Nope. This is our new candle of entry. Looking for pullbacks to here. Yeah, probably would have filled us with my 5 tick offset. 2 ticks. Yeah, I don't know. That would have been close. It's like 2, 3. It's definitely not 5. So again, one of those situations where you need market replay or you just have to be on sim or using real money to really tell if that filled us or not. I guess we can say that it filled us. And then it does, it comes down and yeah, that's within the 5 ticks there as well, 2 ticks. So I'll count that one. I mean, guaranteed that's how I would have traded that. I really don't like having it right on the line. I want to front run it. So, well, either way, look at that. That's awesome, dude. So awesome. Even without this possible discrepancy, we still have our close below candle here or here. And what does it do? Pulls right back to that deviation line again and gives us a target 1. We only have 1 target. So either way, we have that. Let's make it that one. So take one of those. Okay, now 1255. White HMA. White dot. Close above that open price line and we can start looking for longs. There it is. This is our candle of significance. Now we're looking for a pullback to this line and a target up here. It does pull back and it does not stop us out and it bam. Target. that was a stressful one. Took a while. Took 57 to 32. Yeah, that thing was half hour or so. But you'll have that. It's a 5-minute chart, or you can look at it like it's a 200, the 2.5 minute chart. But either way, it's pretty rare that it takes that long. But I don't care. It worked. All right, so we're now looking for. Oh, great. Oh, this is what I wanted to show you folks actually. So there are no signals anyway. You wouldn't have been allowed to trade this craziness anyway, but you see how obvious our ATR goes from like, I don't know, 44, 45 for a 2.5 minute bar, which is quite low, to just a few minutes after the FOMC craziness, then it goes up to like almost 200 ticks ATR. So if we're at a 200 tick ATR, I don't want to be using just one standard deviation. If I do want to go crazy and trade this thing, I want to be using 2 standard deviations, 100 ticks of risk, 100 ticks of profit. So a pair of standard deviation blocks. So 2, so 55 and 55. So it's 110 tick risk. And you can just kind of count on that for FOMC news events in the afternoon. 240, looking for a close above. There it is. Now we're going to need a pullback 2 lines below. I have no idea if this is going to work. 2 lines below would be here. Yeah, it doesn't even seem real. It works. Thank you, Michael, for designing such an amazing piece of software. Hallelujah. Hallelujah, we are free at last. Goodness gracious. So we actually had a 110 tick profit on that one. Pulls back right to the line, to the whipped it right in there. So that's 110, 107 or whatever, 240. And then I think that's our last trade. 355. I ain't trading no 355. 4 o'clock's our cutoff time anyway. So I suggest calling Dave and buying the software if you don't have it already. If you don't buy it after seeing seeing this, I mean, again, like for anybody who doesn't understand, I didn't put these times on the chart in advance, like knowing that these trades would work. And as some of my students can attest, this isn't the first time I've ever used this system before. In fact, I think I was teaching it one of the other day, I don't know. Yeah, please do yourself a favor, buy yourself a Christmas present or a birthday present or make some excuse to buy yourself this TachEon TimeWarp. And just psychologically, it just makes it so much easier to trade, knowing when your windows are. Like I know that from, let's zoom out here. I have these windows. Oh, it's a little hard to see on that. Just like for instance, if you wanted to trade the evening session, I know that there's these windows. I'm only allowed to do 1 trade, well, 2 if you have a stop and or a puncture trade. You have these windows. You know when the time is coming. You don't know if the trade's going to work or not, of course, it's trading. But you know when the time is coming, and you know that 12,000 lines of code is looking through the historical data. This isn't woo-woo. This isn't like some weird California spiritual thing, science, whatever the heck goes on out here. This is just simply 12,000 lines of code looking back through the historical data to find swing points that are repeated multiple times within that time duration, therefore printed out in the future as probabilities of one thing happening over another. So let's see, how many wins did we get yesterday if we would have traded all of them? 1, 2, loss, win. So 1, 2, don't count this because that's a wipeout, those 2. So 1, 2, these are just measurements. 1, 2, 3, 4. I almost can't believe that this one worked. 5 wins again, but I'm gonna count that as kind of 2 wins because it's twice a deviation. But regardless, let's add up the ticks. Then I'm gonna show you the Back to the Future website where you can purchase the TachEon TimeWarp or give Dave a call. I recommend just calling Dave because that's the best way to get the best, like the best package deal. I don't know what he's gonna do or what's going on sale-wise outside of what I'm gonna show you, but the only way to find out really is to call Dave or email Dave. David at backtothefuturetrading.com, I believe, is his email address. You ever use Bookmap? Absolutely not. Thank you, Jim. I don't even really know what that is. Is that the ladder? I don't know, but I have to try to really be careful to not take ideas. Once I have a system, I tend to start screwing with it and adding things. Like this system needs nothing. How can I make this any better? I mean, I don't know. Well, why would I need it? Why would you want anything else with this system? But maybe, I don't know. That's just 2 days. Backtest 20 days. But as I showed you folks before, the standard deviations brought on by the opening range width, that is something that's a gold standard as far as I'm concerned. Where's my calculator? So we got 1, 2, 3, 4, 5, 6. Oh, it's the same. 66 times 6, 396 ticks. Oh no, that's even more, times 5. 1980. Profit. That pays. You know what that does? If you would have taken all these trades like a good boy or girl, that would have paid for your TachEon TimeWarp in 1 day. And what's another thing that's cool is like you don't have to have a $100,000 account to trade the NQ if you're using these standard deviations. You know, I'm just gonna try to drill this into your folks' heads one more time. You know, by the time 9:45, here's 9:45. By the time the 9:45 candle closes, you know that throughout the day, your risk is going to be 55, 60 ticks. Unless you get, once you get to the FOMC, then it's going to change. But for me, pretty much the most of the day, 55. Oh wait, I just did 66. Our standard deviations, I did that math wrong. I had the deviations backwards. Sorry. I'm going to reduce that. It's not 1980. Whatever, close enough. It's 55. 55 times 6. 330 times $5 a tick. 1650. Which is kind of like yesterday. Still pretty much pays for TachEon in 1 day. Definitely. So there you go. Yeah, no, I don't like the ladder, Jim. Thank you though. I just think that there's so many orders that are spoofs, and I don't know. I think that I've actually in 6 years of trading, I've never used the ladder. It's something I have an aversion to it for some reason. Trying to find the orange. Now I can't send the color MAs because Gmail or whatever, my email provider won't let me send it. But if you reach out to me on Skype, I think I can send it through Skype. Jacob Royall, Skype. Let me post it in the chat. Skype or Jake Royall on Skype. JakeRoyall. Enter send. All right, so let me show you folks who everybody doesn't have the software. You might be watching on YouTube. I can find the website. There we go. There we are. The opening range is one of several price ranges that technical analysts follow when watching a chart. Significant. Yeah, that's another thing you can do after a significant announcement. There's a whole bunch of stuff on the internet about this opening range. I actually didn't even know about any of this till today. But I've been using this open range theory for probably a year now. Okay, where are we? Okay, so if you want to buy the software, that would be TachEon TimeWarp. You go to backtothefuturetrading.com or call Dave or email Dave, david@backtothefuturetrading.com. But if you don't want to talk to anybody or email anybody, you just go right to the product store. Go to your TachEon TimeWarp, flagship product from these guys. Again, I'm not a sales guy, but part of what Michael has me do in these webinars is do this part at the end because, I mean, I'd want to know. So there's your price tag. Totally worth it. Big boy and girl tool here. This is professional grade trading software as far as I'm concerned. And you're not going to get professional grade tools in this environment for $0. It's just not going to happen. Buy now. And if you want, you can join Ron's pro trading room, or Garrett's in there now. He's not trading the system that I just taught. It's a different system, but you can join that, or you can go to checkout page without the pro trading room, scroll through your disclaimers, and then we're going to enter a promo code. And I bet you it's still going to work. It's probably going to work forever. Warp off. Apply. Takes $500 off. Now, I don't know if Dave's going to be able to get the price any lower than that, but you can get payment plans with the finance company. I think you have to do it before you go here. Yeah, so financing now available. Let's check this out. Okay. Scroll through. Okay. Oh no, we don't need two of them. Oh, speaking of, you actually get 2 lifetime licenses for your $2,000. And yeah, talk to Dave. Maybe he'll throw in some other stuff, and maybe there are more discounts. I have no idea, but the only way to find out is to call Dave or email Dave. I don't know. Maybe you can throw in a mentorship hour of mine. It's worth a couple bucks. If you want a mentorship hour with me, then you just Skype me or email me. Skype is way better, way faster. And then I'll send you a link to my schedule page. And then you just go to your customer login, and then you can purchase hours through the Back to the Future website. And then Ron and Michael and I split what I make with them, of course. And I mean, pretty much that's it. And do I supposed to say anything else? I think that system speaks for itself, eh? I feel like it deserves some music. Yeah, so I don't have the deviations posted on there anymore, but there we go. Oh, and then I also wanted to show you before. And then, yeah, if you book a mentorship session with me, I'll make sure you have all these tools and whatnot, the fibs and stuff. But if you want to do it yourself, I think this one's, oh, here we go. So one of my students actually made this made some extra levels for me on mine. You just do this 0, 100, 150, 50, 150, and so on and so on and so on. And then you got to alternate the colors if you want to do that. It's not rocket science. It just takes time. And that'll get your standard deviations going. All right, everybody. Anybody question? Oh yeah, Jim, it's Apex Trader Funding. There's a bunch of different companies out there, but Apex seems like they're the most legit as far as I'm concerned. All right, I need a nap and a meditation and a break from the computers. But I appreciate you all. Reach out to Dave, reach out to me, reach out to Michael or Ron. Yeah, from the Back to the Future Trading team, remember, there are no mistakes. Oh wait, let me just make sure that there are no more questions. Yeah, the Gann octaves I just made myself. You just use a fib tool. It's just a Fibonacci retracement. So if you go to drawing tools, Fibonacci retracement, and then if you haven't made your own Fibonacci retracement before, this will, once you get this drawing tool on the chart, it'll come out as, you know, regular retracements like 61.8, da 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 da. And then you just go in and you modify the levels, price levels. Then you put your price, your different percentages in, and that's pretty much it. But reach out to me on Skype, and I can send you the line file or the template file, and then you got to save it in a specific spot as well. Or you can just do it yourself. It doesn't take that much time. Just use 150, and then you got U minus and whatever. Pause the YouTube video. It'll be uploaded tomorrow, and then you can just take a look at that. All right, sweet. I think we're good to go, everybody. Have a good rest of your week, a lovely weekend. And remember, there are no mistakes in trading, only happy accidents. Over and out.